Greetings, ladies and gentlemen, and welcome to the Advanced Public Financial Management learning lesson. The topic is Introduction to Public Financial Management. Today's lesson is known as Best Practices for Public Financial Management in the Global Context. What are best practices? A best practice is a method or a guideline that is generally considered superior to other alternatives because it produces superior results. A best practice is a method, it's a technique, it's a procedure that is generally accepted as being more superior to other methods or techniques. Why? Because it has been proven to prove superior results. In today's lesson, we are studying the best practices for public financial management in the global context. Now, candidates, according to the World Bank Public Financial Management Guidelines, the fiscal framework sets out guidelines for best practice in public financial management. And the guidelines include 1. Revenue collection. The second is improved debt management. Improved debt management. 3. Improved planning processes. Improved planning processes. 4 is improved budgeting. Number 4, improved budgeting. 5, strong budget implementation, accounting, and reporting. Strong budget implementation, accounting, and reporting. Number 6 is procurement. Procurement. 7, strong internal and external oversight. Strong internal and external oversight. These are broad areas. 7. The World Bank Public Financial Management Guidelines. They are in 7 categories. You are going to study each category at a time, beginning with revenue collection. Number 1, revenue collection. Revenue collection. Revenue collection. Revenue collection. So we are going to discuss the guiding principles on revenue collection according to World Bank Financial Management, Public Financial Management Principles. Revenue collection guiding principles. Now, candidates, remember we are studying best practices for public financial management in the global context. The World Bank is a renowned institution when it comes to financial matters. So when discussing best practices, which you've said, these are generally accepted methods or techniques or procedures that have been considered superior to alternatives. Why? Because they produce superior results. So the following are the revenue collection guidelines according to the World Bank guiding principles. Number one, tax is essential. Guiding principle number one, tax is essential. Tax is of essence. Now, tax establishes government's authority. That is to say, government legitimacy is expressed in its ability to raise tax and its citizens' willingness to comply. The legitimacy of a government can be tested by the fact that it can raise tax from the citizens and that citizens can pay willingly. So optimizing domestic revenue collection is also a commitment that needs to be fulfilled before a government justifiably seeks additional funds or aid from donors. So consolidating and extending the revenue base and improving the efficiency of collection of essential tax is one of the guiding principles in public financial management. It is essential to a sound public financial management, to sound public financial management. When the government collects taxes and extends the revenue base, when the government improves the efficiency of collection of tax, then that becomes sound. That is very good to public financial management. So tax is very essential. That is a principle. B is that the revenue services must be properly resourced and motivated. The what? The revenue services must be properly resourced and motivated. Because if revenue services cannot be made to operate efficiently, the outlook is doubtful for other public financial management bodies. So the revenue services must be properly resourced and motivated. Revenue services must be properly resourced and motivated. Then C, policy is limited by external forces. Policy is limited by external forces. Now, in a globalized world, government's choices are less about the tax rate than about the efficiency with which tax is collected and the reach of the tax net. Do you understand? That's a best practice, that policy is limited by external forces. Meaning that in a globalized world, government's choices are less about the tax rate than about the efficiency with which the tax is collected and the reach of the tax base. That means what is more important is the efficiency with which the tax is collected and the reach of the tax net, and not the rate. So that's why government should not concentrate so much on increasing the tax rate, but checking the efficiency with which tax is collected and the reach of the tax net, broadening the tax net so that many people can be brought into the tax bracket. D, candidates, you are discussing the World Bank's financial management best practices in public financial management. There are 4 areas. The first one is revenue collection guideline. Revenue collection, we are now here looking at the specific guiding principles, revenue collection guiding principles. The other principle or best practice here is that optimizing the revenue services depends on a number of factors. Optimizing revenue services depends on a number of factors. One of them being determining an appropriate policy for the country's specific economic development. Number 2, proper consultation and coordination between tax policy and tax administration departments. Another factor is the tax administration should be empowered both legally and with respect to human capital. All right? By human capital, we're referring to revenue services needed, properly motivated, should be properly motivated, and the staff should be properly motivated and managed. Then 4, we are looking at the factors. We've said that optimizing revenue services depends on a number of factors. The 4th factor is that adequate systems and data are needed to ensure accurate forecasting so that gaps between revenue focus and outturn do not destabilize the fiscal framework. And of course, number 5 is the transparency, predictability, and fairness in the implementation and collection of tax and in the tax department's interaction with citizens. Another factor is the ensuring full and timely accounting for all government revenues and receipts. And finally, another factor is effective control of arrears and write-offs. So optimizing revenue services depends on the factors, the 7 factors that I've listed. So these are the revenue collection guiding principles. Number 1, tax is essential. Before a government seeks donor funding, it has to be very keen on its taxation policy. Do you understand? Why? Because we've said tax establishes government's authority. That is to say, a government legitimacy is expressed in its ability to raise tax and its citizens' willingness to comply. So optimizing domestic revenue collection is also a commitment that needs to be fulfilled before a government justifiably seeks additional funds or donor funds. So these are revenue collection guiding principles. Number 2, improved debt management guiding principles. improved debt management guiding principles. That is the second set of best practices for public financial management. Improved debt management. So let's highlight the improved debt management guiding principles. Now, the first principle is that government funding activities play a key role in determining the fiscal envelope, also in communicating government policy to the markets, and determining the cost of borrowing in the economy as a whole. That's the first principle, guiding principle. Government funding activities. Government funding activities. Government funding activities do what? Play a key role in determining the fiscal envelope. Play a key role in one, determining, I've said in one, determining the fiscal envelope. Number two, in communicating government policy to the markets. Number three, in determining the cost of borrowing in the economy as a whole. B, the second guiding principle, is that proper management of the government's borrowing program will reduce the cost of funding. Proper management of government's borrowing. Proper management of government's borrowing will do what? Will reduce the cost of funding. We reduce the cost of funding through reducing the level of risk and uncertainty associated with investing in government stocks. The third principle is that sound principles for deficit funding should be established. Establish sound principles. Establish sound principles for deficit funding. We are discussing improved debt management guiding principles. Establish sound principles for deficit funding. And these principles, candidates, are crucial to effective public financial management and macroeconomic policy. The principles should include, number one, the public debt burden should remain sustainable, not only for the present, but also future generations. Number two, second principle is that there should be a clear and sustainable deficit target for the short term, medium term, and long term. There has to be clarity on that. What is the short-term deficit target? What is the medium-term deficit target? What is the long-term deficit target? That has to be established. The second guiding principle on deficit funding, the third one, is prudential guidelines should be put in place to manage contingent liabilities with respect to government guarantees, the government employee pension fund, and also debt consolidation to minimize costs, and also parastatal borrowing should be set. Prudential guidelines to manage contingent liabilities. That is the third principle for deficit funding. The fourth principle for deficit funding is that departments should not incur financial or contingent liabilities that attempt to leverage a departmental budget above that which was intended in the budget approval process. A very important principle, deficit funding. Departments should not do what? Should not incur financial or contingent liabilities that attempt to leverage a departmental budget above that which was intended in the budget approval process or estimates. The fifth principle on deficit funding is that governments need to build a sound framework for managing contractual relationships at a departmental level and within state-owned enterprises. And lastly, the accumulation of arrears is the same as overspending and should attract the same penalties. That's a good principle for deficit funding. So when dealing with the debt, when managing debt, the government should establish sound principles for deficit funding. I've outlined 6. The last one being accumulation of arrears, which should be penalized, because that would mean overspending. So overspending should attract same penalties. So those are the principles on improved debt management. Then we have improved planning processes. Improved planning processes. That is number 3. Improved planning processes. Improved planning processes, guiding principles. Now, candidates, we all know that a plan is a predetermined course of action. A predetermined course of action. Planning, we all know, is a logical organization of activities towards achievement of objectives. And here we are talking about the government. So these are national objectives. While budgeting, which is the next step here, or a set of best practice, budgeting is the financial representation of the national plan, national objectives, the financial representation. Now figures are put to the plan. So planning is a logical what? Organization of activities towards the achievement of national objectives. Just activities, you plan the activities. Now when we move on to budgeting, we realize that budgeting, on the other hand, is the financial representation of the plan. And the demand for public goods will always exceed the supply, that we know. The demand for public goods will always do what? Exceed the supply. So effective planning and allocation of resources is therefore critical. And best practice in expenditure planning requires that, 1, governments should develop and institutionalize planning processes at all levels of government. That's the first principle. Okay? Develop and institutionalize planning. Let me put it down. Develop and institutionalize planning at all levels. Why? Because the demand for public goods outstrips supply. So the expenditure planning then requires that the government should develop and institute the planning process at all levels. Number two, planning needs to be based on realistic expectations concerning the future availability of resources. Should be based on realistic expectations. When you are coming up with a budget, the budget has to be realistic. And when developing a budget, it's important to consider the availability of resources in future to finance the budget. That's a good practice, a good best practice. Best practice, that is a best practice. The third point is that government should create the capacity to manage public-private interface. Capacity to manage public-private interface. Capacity to manage public-private interface and to leverage private sector activities in meeting the public objectives. D, plans should be flexible. We are discussing guiding principles in improved planning processes. Plans should be flexible and revisited periodically as circumstances change and plans fall out of date. Planning should be based on sound information. Planning should be based on sound information. Planning needs to be based on sound information on current expenditure trends and address short, medium, and long-term issues. Six, public outcomes, we know candidates, are mostly long-term outcomes. And to change the outcomes, therefore, requires aligning the planning horizon with the length of change processes. You understand? Public outcomes are mostly long-term outcomes. For example, if the government wants to develop, say, infrastructure, takes time, right? The, projects within government mostly are long-term. The outcomes are to be realized for a long period of time, are mostly long-term outcomes. And to change the outcomes, therefore, requires aligning the planning horizon with the length of the change process itself. Another point here, or best practice, is lengthening the time horizon. Candidates we know requires bringing other stakeholders on board, because successful public financial management reform, which results in a bigger impact for the society as a whole, usually requires implementation over a period that extends beyond the life of the democratically elected parliament. So there ought to be what we call bipartisan political commitment to the process. We should then ensure full implementation, even though there may be a change of government or regime. And lastly, on improved budget planning processes, guiding principles is to do with the issues identified during planning. Such issues need to be appropriately reflected in the budget stage. The issues identified during planning needs to be appropriately reflected in the budget stage, because we said at the beginning that a plan is a logical organization of activities towards achievement of national goals, while a budget is the financial representation of the plan. So if issues are identified during planning, then such issues need to be appropriately reflected in the budget. So I've given you 7 improved planning processes guiding principles. Now let's move on to budgeting. Number 4, budgeting. This is improved budgeting. Improved budgeting guiding principles.
3, 2, 1, action.
Improved budgeting guiding principles. Candidates, you are studying the best practices for public financial management in the global context. We are on point number 4, that is on improved budgeting guiding principles. Now, candidates, there are a number of principles that should be respected in the budget process. And one principle is in relation to the budget reflecting the overall economic policy. The budget should reflect the overall economic policy. The budget should reflect the overall economic policy. Very important principle. The budget should reflect overall economic policy, both in focus and in scale. The budget also ought to be accurate. The budget should be accurate. It should be accurate. The budget should be informative. The budget ought to be comprehensive. And when we are studying the national budget process, you recall we said that the Cabinet Secretary of National Treasury issues a circular to all county and national government public entities. Within the circular, the entities are required to prepare a budget using a certain format. So when developing the format under the regulations through what we call the subsidiary legislation, the Cabinet Secretary for National Treasury is required to ensure that the forms that the public entities use to prepare the budget should be in such a way that they provide adequate information, comprehensive, and it must, the budget must encompass all government revenues and expenditure. So accuracy, that's the definition of accuracy here. By being accurate, we mean that the budget should be informative, should be comprehensive, it must encompass all government revenues and expenditures. Another important principle in improved budgeting is that aggregate expenditure outrun and its composition should not consistently diverge from the budget. And sanctions should be in place for budget overruns. Sanctions should be in place for budget overruns. There should be sanctions, there should be penalties for overruns. It's a good improved budgeting principle. Number 4 is that the budget should include a discussion on public liabilities, assets, employee payment or pension obligations, tax and non-tax revenues, as well as details on public expenditure categories. Public liabilities should include public liabilities, assets. The budget should include public liabilities, it should include assets, employee pension obligations. I've said it should also include the tax and non-tax revenues, as well as details on public expenditure categories. A very important guiding principle. Still on budgeting, the other principle is that the annual multi-year budget should be based on medium to long-term framework. Based on medium to long-term framework. Should be based on medium to long-term framework because this greatly enhances the predictability in departmental allocations and has a positive impact on planning and execution within the government. It should also be participatory. Budget making should be participatory and transparent. That's why here in Kenya, the Cabinet Secretary for National Treasury is required to provide guidelines on how the members of the public should participate in budget process. The accounting officer for the National Assembly and the accounting officer for the judiciary likewise are required to issue guidelines on how the members of the public will participate in the budget process for the judiciary and for the legislature. Because under the Kenyan law, the public finance management, the budget for the National Assembly is not prepared by the National Treasury, but the accounting officer for the National Assembly, that's the clerk. Then the registrar of the judiciary prepares the budget for the judiciary, and therefore the three, that is the Cabinet Secretary for National Treasury, also the registrar of the judiciary, and the National Assembly clerk, they ought to ensure that the members of the public are included in the budget process at the national level. The same should also happen when it comes to county government budget process. There ought to be the process ought to be participatory and transparent. That is best practice in improved budgeting. All right? Participatory and transparent. It should include all stakeholders, including civil society, private sector consultations, and we may have parliamentary public hearings as well as full or open media coverage. Moving on to the next guiding principle, the budget cycle should provide sufficient time for informed discussion by Parliament. Parliament should be given sufficient time to discuss the budget estimates that are submitted to it, plus the budget documents, because the Parliament is a body that represents the people. Okay? The members of Parliament are representatives of the people. So they ought to be provided sufficient time for discussion. That's a good practice. Should allow, provide sufficient time for informed discussion by Parliament. Moving on, these are improved budgeting guiding principles we are discussing. Another point is that comprehensive information on the budget and its outturn should be widely managed and should assign clear responsibility from political head of the department responsible for policy matters and outcomes to the head official. Expenditure management processes should assign clear responsibility from the political head of department responsible for policy matters and outcomes to the head official, who could be maybe the permanent secretary or the cabinet secretary or any official that is responsible for outputs and implementation. Then I can also say in closing this point that there must be monitoring of progress. Monitoring. There ought to be monitoring of progress or monitoring of the implementation process of the budget. The budget should be focused on ensuring better outcomes and not inputs. That's why in Kenya we have the controller of budget who monitors the implementation of budget. So there must be a monitoring of progress, and the budget should be focused on ensuring better outcomes and not inputs. So that is number 4. Number 5, we have strong budget implementation and accounting and reporting. 5. Strong budget implementation, accounting, and reporting. These are guiding principles. What are the guiding principles? What are the best practices when it comes to budget implementation, when it comes to budget accounting and reporting? Now, candidates, managing the implementation of the budget and expenditure management processes are essential to the credibility of a public financial management system. And a number of principles must be respected in implementing the budget. The first principle is that the budget must be approved by the legislature. Approval by the legislature. And our constitution here in Kenya provides for approval of the budget by the legislature. The budget is prepared by the Cabinet Secretary. Cabinet Secretary is the one who is responsible for the development of the national budget, which he or she then submits to the National Assembly for approval prior to implementation. Then implementation must comply with laws. Implementation must comply with accounting laws. Implementation must comply with accounting laws, as well as financial management laws. In Kenya, we have the Public Financial Management Act, which details on how the budget ought to be implemented. There are many sections in the Public Finance Management Act on implementation of both the national budget and the county government budgets. C, implementation should ensure good performance and value for money. Value for money. Implementation should do what? Should ensure good performance and value for money in government operations, and should cut government costs and wastage. Another point is that successful implementation requires capacity and capacity development. Capacity development. Implementation requires capacity development, especially training in modern public financial management techniques. So those who are to implement must be trained, must be developed. E, the office of the controller of budget must be properly resourced. Must be properly resourced. The controller of budget office. Office of controller of budget must be properly resourced, because it is this office that monitors the implementation of the budget. So this office ought to be properly resourced. It has to be properly funded to fulfill its function. And the role includes providing clear definition of reporting responsibilities, the day-to-day cash management, coordination with the committees responsible for overall cash and debt management, the preparation of annual report and accounts of government in a timely manner, and compliance with the accounting norms and standards. That's what is required of the Office of Controller of Budget. All government's expenditure must be accounted for. All government expenditure must be accounted for. All government expenditure should be accounted for in a timely and significant deviations from budget estimates should be investigated. Because when planning the budget is clear, because remember in the format that is provided in the, by the Cabinet Secretary, is clear how much a departments get. There has to be a list of all departments, of all entities that should be paid. That list must be provided. The amount that should be spent by the departments, by the entities, must be indicated. So therefore, all expenditure must be accounted for in a timely manner, and any significant deviations from budget estimates should be investigated. Then there is a point on the format, which I've already talked about, the format. The format should be clear. There ought to be clear rules regarding the format, the frequency, and also the timing of financial and operational reporting. Format of the report. It has to be clear. That is format. So these are the strong budget implementation, accounting and reporting guiding principles. Moving on to the sixth set of principles, we have number 6, procurement guiding principles. Procurement guiding principles. There should be clear rules on open and accountable procurement policies based on the following guiding principles. Number 1, these are procurement guiding principles. Number 1 is that a centralized procurement authority should be set up. Set up a centralized procurement authority. And in our earlier studies in public finance, we went through the Public Procurement and Disposal of Assets Act. All right, if you recall the topic on procurement. So one good guiding principle here is setting up a centralized procurement authority. We should be responsible for bringing about an efficient and effective procurement system into government. You will also recall we also studied the benefits of e-procurement in government. So there ought to be a body that should manage such system. And candidates' procurement decisions based on the rules should be decentralized to the bodies like the line ministries, the bodies that are responsible for funding, procurement, and so on. B, review procurement laws. Review procurement laws. So procurement laws should be reviewed to meet the best practice criteria principles. These are principles like transparency, fairness, openness, value for money, and so on. C, sanctions. Sanctions. Sanctions must be implemented for non-compliance with regulations. All right? Then D, the other guiding principle on procurement is that there should be strictly scrutinized and accountable procurement procedures, and especially procedures on the tender process, tendering process, which again we covered extensively in our lesson on tendering in the public finance and taxation subject. We went through the tendering process in government, a long process, which in our Kenyan context is very strict. The procedures are very clear, are clearly outlined in law. So that's a good practice. There should be strictly scrutinized and accountable procurement procedures like the tender processes. Strict procurement procedures. So these are guiding principles on procurement. Then we have guiding principles on internal and external oversight. Number 7, strong internal stroke external oversight. Now, what are the guiding principles for strong internal and external oversight? Now, candidates, effective oversight and monitoring are crucial to sound governance and public financial management reform. And a well-functioning public financial management system must have clear rules on transparency and reporting, as well as enforceable sanctions for failure. And oversight should take place both internally and externally. And that generally means shifting the locus of control from outside to inside the organization. So we have two aspects: guiding principles for internal oversight and guiding principles for external oversight. So we'll begin with internal oversight. Internal. Now, the internal oversight should be done by the Ministry of Finance. It should come from the Ministry of Finance. The Ministry of Finance should be given oversight responsibility for all line ministries, all departments and agencies in the budget and implementation process, which in turn should have adequate and current timely information and data to manage their own finances, and also to provide the Ministry of Finance with records. So the first guiding principle here is that Ministry of Finance, the Ministry of Finance, the Ministry of Finance should be given oversight responsibility. Is the ministry that is responsible for internal oversight. The second principle is that the internal oversight should include internal audit function, which must be effective and should comply with the generally accepted auditing standards with regard to staffing, planning, and also reporting. Internal audit. There ought to be an internal audit function. In other words, internal oversight should be carried out firstly by the Ministry of Finance. Then secondly, there ought to be internal. There ought to be the internal audit function, which must be effective. It must comply with the generally accepted auditing standards. These are standards with regard to the staffing of the audit internal audit department, the planning of the internal audit, and reporting of the internal audit. So the internal audit mechanisms in an organization or in government should ensure that spending is within budgetary provisions. That's another, that is another guiding principle under the audit function, internal audit function. Number one, the internal mechanisms should ensure that, one, spending is within budget provisions. Number two, disbursements comply with the specified procedures. Number three, there is dual control, which is employed in processing transactions. Dual control means there should not be one person carrying out all the transactions. The work of one officer should be checked by another. Number four, there ought to be timely reconciliation of accounts. These are the job of the internal audit function. Number five, there ought to be sanctions for non-compliance. The sanctions must be defined and also applied. The sixth role of the internal audit function is that it should ensure there is effective systems for managing physical and financial assets. Effective systems for managing physical and financial assets. The internal audit mechanism should ensure that the physical and financial assets are developed. These are controls. Then the internal audit mechanism should ensure adequate management reporting systems. They should ensure that there are adequate management reporting systems in place. And another point is that from time to time, the audit internal audit department should randomly carry out operational performance audits. Operational performance audits. So I have highlighted 8 guiding principles under the internal audit function. Then let's discuss the external oversight, guiding principles. External oversight, guiding principles. Now, there should be what we call parliamentary oversight. One, parliamentary oversight of PFM, Public Financial Management. And parliamentary oversight should take place in a number of ways. That could be through the tabling of documents, it could be through debates, it could be through questions, it could be through raising and explanation of the public finance management issues, it could be through the operation of parliamentary finance committees who are empowered to oversee budget formulation and appropriation. It could be through implementation of policies and also and so on. So it could be through parliamentary finance committee. The role of the parliamentary finance committee is to oversee budget formulation and appropriation. Another role is to oversee implementation of policies and outcomes of budget allocations and so on. So all forums should be open to the media and public. All forums, whether it's through the debates, whether it is through raising questions, whether it is through tabling of documents, when Parliament carries out oversight of the public finance management system, it has to be open to the public, it has to be open to the media. Do you understand? All forums should be open. That's a good best practice. And Parliament itself should be independent. It should be adequately resourced and should have knowledgeable members with sufficient resources at their disposal to be able to interrogate public financial management issues. Do you understand? Parliamentary oversight. So a guiding principle here is that this parliament that is to oversight public financial management issues, number one, this parliament has to be independent. Number two, this parliament ought to be adequately resourced. Number three, the parliament should have members who are knowledgeable in public financial management matters. Otherwise, if they have no knowledge, then what are they going to interrogate? What are they going to oversight? They need to be well-trained, well-educated in matters to do with public financial management. That's why it's important when electing a leader as a good citizens, you need to check the qualifications also of the members so that we have members of parliament who can help in carrying out some of these functions. Parliamentary oversight of the public financial management issues. Another way or principle is having what we call a standing committee on public accounts. Standing committee on public accounts. Standing committee on public accounts. This is a best practice. Standing committee on public accounts should be afforded a special status, including that its chairman be drawn from the largest opposition party. And its members must have what we call financial acumen. The members who sit on this committee, Public Accounts Committee, should be members who have what we call financial acumen. This committee ought to be given or be afforded a special status. This committee should ensure value for money in public finance management through results and outcomes. And the resources of such a committee, candidates, the resources of such a committee should be greater than for other committees. given that it should be independently able to interrogate both the reports of the Auditor General and the affected departments or entities being reported on. Because examining the Auditor General annual financial reports is crucial, not just for the public finance management, but also for governance per se, for governance. All right, external oversight. We move on to another office known as Ombudsman. The Ombudsman. The Ombudsman. The public must be given effective redress through the office of the Ombudsman or similar channel. This office is for the settlement of complaints relating to public financial management without having to rely on the courts. This office must be provided protection and security of tenure to public officers in the performance of their duties without being exposed to the intimidation of political pressure from other public officials. This office is used by the members of the public to submit their complaints in public financial management. Do you understand? These are best practices in public financial management in a global context. Office of the Ombudsman. External oversight can also be from international bodies. International bodies like the IMF, like the Transparency International, like the Bank of International Settlements. We may have external oversight from IOSCO. It may also come from the International Committee for Bank Supervisors, all of which reinforce effective oversight and best international practice. And being a member of such bodies and participating in their various working groups and the technical committees enhances skill development and accountability for public officers. International bodies can also play an oversight role in public financial management. Media. Media is another external oversight. It can also play external oversight functions. The media, including the civil society groups. All right, the media, civil society should be regarded as public finance management stakeholder institutions and should be encouraged to play a role in bringing to light failures and also successes in public finance management. The media should be allowed to do what? To engage in open dialogue with officials and have access to the sitting of parliament and meetings of, we mentioned here, Committee on Public Accounts. Moreover, the press should be on timely basis be briefed of the budget so that the public is informed of the developments and problems, if any, especially in public, especially in spending. And funds should be allocated for the education of public on budgetary processes. Remember, we talked about public participation. For the public to participate, there ought to be spending from the public. So there ought to be money to help the members of the public to participate in the budget process. And all stakeholders, including the civil society, the private sector, the professional institutions, must be proactively engaged in the process or be engaged in reform. Okay? They should be provided the incentive, the requisite incentive to participate in the laying of the foundation of a workable infrastructure, good governance, and deliverable policies. So these are some of the external oversight parties: Parliament, Standing Committee, Ombudsman, international bodies, media. This list is not complete without the Auditor General. Auditor General. The Auditor General candidate is or should be the external auditor for all government affairs, the Auditor General. In Kenya, the Auditor General is an independent office, the office of the Auditor General. Now, the Auditor General should be independent and subject only to the rule of law, so that functions can be exercised without fear or prejudice. And no political person should interfere with the functioning of the office of the Auditor General. And to protect its independence, the Auditor General should be nominated and approved by Parliament and should report to an audit commission consisting of members and non-members of Parliament, and not to the executive. The office of the Auditor General should be also well funded. The office should be well staffed. And the office should be physically housed in separate and independent offices to any part of the executive. Furthermore, the Auditor General should have an advisory board to assist in the performance of duties and to provide technical support. And that should not limit the Auditor General in relying on the work of external auditors or of internal auditors. All right? Auditor General must be independent. The Auditor General should be the external auditor for all government or public entities. Then let's talk something in regard something on FG, judicial enforcement. Judicial enforcement. There ought to be procedures in place whereby judicial enforcement may be exercised by the courts to ensure that the provisions of Public Finance Administration or the provisions of the Public Finance Management Act and regulations are fully respected and adhered to. Judicial enforcement. If you read the Public Finance Management Act, you may find there are some penalties for failure to adhere to the provisions of the Public Finance Management Act, and therefore, as part of external oversight, procedures should be in place whereby judicial enforcement may be exercised by the courts to ensure that the provisions of the Public Finance Management Act and regulations are fully respected and adhered to. Regulations may be contained in the subsidiary legislation that could be developed by the Cabinet Secretary in relation to budget process or any other processes in the public finance management system. So, candidates, that will mark the end of the lesson on Introduction to Public Finance Management. Today we studied best practices for public financial management in the global context. At the beginning I said that a best practice is a procedure or a method or a technique that is generally accepted to be superior to the alternative techniques or methods. Why? Because the method yields superior results. Now, in public financial management, the World Bank, which is a respected body, developed the best practices for public financial management, and they are categorized into 7. These are broad categories. 1, we have guidelines on revenue collection. There are guidelines on improved debt management. There are guidelines on improved planning processes, guidelines on improved budgeting, strong budget implementation, accounting and reporting guiding principles. We also have procurement guiding principles and strong internal and external oversight guiding principles. We've discussed all the guiding principles under the 7 categories. Best practices for public financial management in the global context. Of course, the last one being the strong internal and external oversight. And there are 2 categories here, the strong internal oversight, external oversight. So if you have any question, please you can send it. But before we close the lesson, as it is our custom, I'm going to leave you with one question for your assignment. Here's the assignment. Outline the best practices for public financial management in the global context. When answering the question, please avoid picking the answers directly from your notebook. First of all, go through the lesson one more time, write down the notes. Then when you are through, close the book and try and see if you can recall the best practices for public financial management in the global context from your memory. Then you can mark your work. If you find that you've made mistakes, then you can learn from your mistakes. Go through the video one more time, then close the notebook, see if you can retrieve, if you can recall from your memory what we have learned in our today's lesson, best practices for public financial management in the global context. Thank you. God bless you. Bye-bye.